So welcome back to the podcast. My name is Scott Reynolds. This is the Reynolds team, and I have a very special guest, actually a returning guest, Danny Greco with Homeowners Insurance, which is a very popular discussion lately here in Florida.
Yeah. Popular, unpopular. I don't know what to say about that, but
so welcome.
Welcome
back.
Thank you for having me.
When was it? Was it a couple years ago?
It was about a year ago, a year and a half ago.
Okay.
Yeah. Man, it could have been a couple years ago. Time has flown right on by.
And at that time, like, what was going on? Like, carriers were leaving the marketplace?
Yeah, I was just about to say, last time I was here, we were in, I guess what you want to say is the insurance crisis. Mm-hmm. You could say, it was safe to say that. Carriers were leaving the state. Carriers were shutting down. Carriers were reducing their capacity, meaning they were non-renewing policies.
Right.
So we were really at the, really at the low point, in the insurance market in a long time in Florida. So good news this time. I have better news that we're coming out of it. We're doing a lot better.
So what was interesting about that time was, interest rates were at a pretty high point, and it was like a new high. So it was like unfamiliar. And then, cost, and basically the prices of homes were up, and then cost of insurance was up. And obviously when they're buying the new home, the taxes are based on the new sales price. So just the cost of homeownership went up. And there was, I think, a lot of sticker shock going on. And so this kind of what you were saying, carriers were leaving, which the ones that stayed in were like, this is how much more it costs.
Yep.
So
when they know they're the only gig in town, they'll do that. And at that time, there was a few players that were able to kind of weather the storm and stick around, but they were taking rate, which means they were jacking up their rates.
Right.
The sticker shock for especially the out-of-state people was a big hurdle that you guys as realtors had to deal with. I had to deal with. But now we're kind of seeing it level off a little bit. Rates are not going to go way back down like they were before, but they are not climbing. We're getting more messages from our carriers saying we're reducing our rates instead of every day an email saying we're going to raise it 2%, 3%, 5%, 10%.
What do you think is driving that?
It's more options. Like I said, the carriers were leaving, carriers were shutting down. Now you have carriers opening up. You have carriers moving into say new competition. So, like I said, there's not just a couple of kids on the block anymore. There's more people that are in the market. Because
I know insurance a lot of times is like an equity type, business. And there's a lot of equity in the there's a lot of cash and a lot of money available for these kinds of things. So probably it sounds like some new carriers coming in, looking at the investment opportunity.
There was carriers that were shut down that opened back up. So they didn't leave, but they were closed for new business. Okay. Now we're seeing those carriers open again.
Okay.
We're seeing their guidelines loosen up, where a lot of carriers during that time said, okay, we're only writing homes 10 years or newer, or we're only going to write homes that were built before 1985. Now you're starting to see leeway there, and you're starting to see underwriting guidelines loosen up, which is what us as agents really like, because we don't want to be, pigeonholing our clients to saying, if you got a house built in 1956, we got nothing for you besides Citizens, So, we want to avoid that. We want to put people with private insurance carriers.
So when it's bad for single family homes, it's just as bad or worse for condominium buildings.
Yeah. I mean, a lot of the big increases, the big thing that happened with condo buildings was the association, was the commercial policies.
Yeah.
Where those were going up so much that all these unit owners were getting assessed 2, 3, 4, 5,000.
Yeah. Because
the master policy of the condominiums were going up so high. And those are still very high. The renewals on those are still 50%, 70% higher than they were in years past.
Right. And then, so in the condo market, there is good news in all this, but we do want to paint like where we're at and where we came from.
Right.
So so back on condos, they have the regular maintenance and like things that need to be done,
Right.
and the structure analysis and balconies and things like that.
We are seeing the cost to the unit owner go down, but we're seeing a little bit cost to the association go up. So there's a little balancing act there. The individual policies for if you just have someone buying a condo, their condo policy, there's a lot more carriers now in the game, basically, and those prices are going down.
And when you're saying that, you're really referring to replacement of cabinets, like the interior stuff.
Coverage, right?
And then so we're seeing commercial policies, like for the structure and outside.
Especially for the wind, for the hurricane coverage for the building. So the condo buildings on the island, those association policies, the master policy, the commercial policies, those are still going up a little bit. So we're waiting for some correction there. Much needed.
If you're in the market and you're looking at condominiums, I always advise people if you really want to understand the association fee or the condo fee is to request the last budget, and it's all broken down where your fee goes.
Yes.
And unfortunately, a big chunk of it goes to insurance.
Right.
But you see where it's like lawn service, tree service, pool, and then reserves, and you definitely want the reserves.
Right.
But insurance has been the one that's been really, besides the regular assessments, have been moving the needle on that.
Yeah.
All right. So that's all the bad stuff. so now on like kind of coming out of that, what's changed? What do you see, moving forward?
Moving forward, we definitely see some rate corrections. Like I said, when we were in the crisis, I would get in the office and I'd have 3 emails from a carrier saying, from now on, homeowners policies are 5% higher, 6% higher, this and that. Mm-hmm. We're not seeing that very much anymore.
Okay.
We're seeing things level out. We're seeing carriers kind of coming back into the game. Carriers that didn't want anything to do with Florida now are interested in Florida or trying to get into the Florida market. Like anything else, more competition, prices go down.
And, we were kind of talking off camera about specific carriers that are maybe better with frame construction homes,
right?
With maybe the 1950 homes or maybe the new construction homes. They do great with new construction homes.
That's really what we're seeing. We're seeing carriers broaden their appetite for things. Where we were in the thick of the insurance crisis, carriers were really specific about what they want and what they didn't want, and things that didn't fit in their little box were out. And, it left a lot of people having to go to Citizens, or maybe having to go without insurance, or maybe having to go without wind insurance to save money.
Right.
So we're seeing people have more options now.
Now, of course, if they have a mortgage, the mortgage requires it.
Right.
It's not, insurance isn't requiring it. It's actually a mortgage company.
Right.
Different subject for a different day. I really wish there was some sort of government ruling on, how much the mortgage company can dictate and like give the owners, availability of taking some risk.
Right.
Based on, I don't care if based on assets or credit score or something.
Right. These mortgage companies, they want their loan amount, safe. You know what I mean? They don't want to leave it to the homeowners to have that money to, make a repair or do something, and maybe they don't have the money, Right. I mean, in our economy, people are living more paycheck to paycheck now, I feel like,
right.
Than in years past. So, the mortgage companies got to do what they got to do, I guess. But
a situation that kind of comes up a lot of times with our contracts, we may have a home that has, God forbid, it seems like the 19-year-old roof or 18-year-old roof.
Yep.
And we're in the closing, we've done we're in the transaction, and we've told the buyer, somebody's buying a new roof, and or in the next 2 or 3 years, the inspector's gonna tell you got 3 to 5 years on this roof. Now the insurance company may say, I don't insure roofs X amount, so we may be limited on insurance carriers. When like let's say both parties are on the same page, is there now a way where if we want to have the closing and then the buyer replaces the roof within a certain time period after closing?
We're still stuck with that. We're still not able to do that. These carriers are not willing to insure an old roof even for 30 days, especially if you have an inspection where it says the roof
3 years or 5 years.
3 years, less than 5 years remaining useful life, or it's got missing some cracked tiles, or it's got missing shingles and stuff. These insurance companies are not willing to even risk those 30 days where someone could file a claim for a new roof. It's bad business for them. And,
Wow.
in years past, when I started this business, you could call an underwriter and you could talk to them and you can say, these people got a roofing contract, they're going to put a new roof on. That's done.
I get deposit, sign contract.
The whole thing, it's over. I mean, even a carrier like Citizens is almost impossible to get that approved. There's a process where you can submit it and you can have them, look at it and stuff. But 9 times out of 10, they say no dice.
That's too bad. I wish they would give you a bananas rate, and then when the roof is done, give you the real rate.
As insurance agents, that's what we tell when we meet with our marketing reps for insurance carriers. We tell them, look, if you want, take the rate, charge them. Yep. They'll pay.
For 30 days.
For 30 days. And then we can adjust it after that. They don't, even if you charge them a minimum earned premium. So a lot of carriers that will do the older roofs, they know that people use them for that. So they will say, okay, we'll do it, but we keep 25% of the premium. There's insurance carriers that will do a 19, 20-year-old roof, but they'll say if this policy goes through any period of hurricane season, we're going to keep 50% of the premium. And whether you get a new roof tomorrow, that's ours.
Oh, okay.
So it's a trade-off there.
Yeah.
You're telling people, okay, you can close on this house, you can put the new roof on after, but you're losing 50% of whatever this premium is.
Okay.
And if it's 10 grand, if it's 15 grand, you're telling people you're, throwing $7,000 in the trash, which is tough to tell people. But, these carriers kind of know their niche and they know what they're used for, and they know how, people need to close on the house. They want to close on the house. They love the house. People fall in love with real estate, right? They fall in love with a house.
Tapping into the emotions.
So they know that, and, they do certain things like that to make sure that they get their end. Yeah. And you guys get what you want. You know what I mean?
So in that example, the owner would just need to replace the roof before closing, extend closing,
right, and
deal with the contractor and the timelines. For
and
that.
a lot of these roofs, and what I tell a lot of my realtor friends is, if you have a roof, and it's all dependent on the seller and what they financially can do at that time. Mm-hmm. But if you have a roof that's really in bad shape, that's really beat up, that's not going to pass inspections, and that, be more proactive about it. Go to the seller and be like, what if we can broker something where, they pay half of the roof, you put the new roof on now, they're able to get insurance, right. So it's a trade-off on the older roof stuff. It's always a wheeling and dealing, somehow.
Yeah, well, we've done with some of our sellers, our brokerage has a program where to assist the owners, right, that they'll actually give them funds to do major things like that, and they just have to pay it back at closing, and it's 90 days is interest free. And so
it's a great idea. It makes everyone's life easier. Yeah. You know what I mean? Some sellers are like, look, that's why I'm selling my house. I don't have 40 grand for a new roof or something.
Yeah. They probably thought about replacing the roof, and maybe one of the reasons they're moving.
Right. But the roof age, especially in our county, is that Francis and Jean came through 04, 05. So all those roofs, the clock started ticking then, right? So now they're all 18, 19 years old. Yeah. And it's, there's a lot of them around here.
Yeah.
So it's something we deal with every day.
If somebody is shopping for insurance and money's they want to be smart with their money, what are some components that they can look at to save some money on a policy? Because there's a lot of moving parts on the policy.
There is. And, there's some bells and whistles that you throw on an insurance policy, but most of the time it's two things. It's your deductible, it's your insured amount, the dwelling amount.
Yeah.
What do you insure the house for? Which if you have a mortgage and stuff, sometimes you're forced to do it a certain amount. And then there's, your personal property.
Right.
So, some people, if they're really tight on, debt to income ratio on their mortgage and they're trying to buy a house, there are things that we can do. Right. You know what I mean? We know the max deductible that mortgage companies will accept. So we can put that at the max.
Right.
We know that mortgage companies don't care about your personal property, your furniture, your clothes, your TV.
So you can play around with the value of that of replacement value.
Right.
And you can also go with actual cash value.
Yeah. Some people don't realize, you look at some of these insurance policies and replacement costs on their personal property, that coverage could be $1,000.
Yeah.
It could be $800, could be $1,500, depending on the whole value of the policy. But, that's a good way to knock it down, get you under a certain amount for closing. And then after closing, you can, as long as there's not a hurricane incoming, we can make any changes that you want. So I think, I try to educate people like that if they're really tight, on budget, on closing, on debt to income, on all that stuff. There is strategies that we can do.
Is window protection, there was a point in time where the discount wasn't that big. Is the discount bigger now that the rates are higher?
The closer you get to shore, the bigger the discount is.
Okay.
So, if you got a house in Point West built in 2010, the window covering credit is not going to be
It's nominal.
much. It's not going to move the needle for you.
Right.
If you're buying a house in Central Beach here, especially an older home, maybe even a frame home, that the hurricane shutter credit is going to be everything.
Okay.
So it's
That's
really
good
going to
to
be
know,
a make
because
or break.
there was a point in time where it was not such a big deal.
But it is now. And like the closer you get to shore, the more chunk of that premium goes to.
And obviously, age of roof dictates the value, or not value, but the
Eligibility.
risk, eligibility, if you can even get it.
Oh yeah, yeah.
And then there's some other, like I know on the wind mitigation report. By the way, the wind mitigation is done during your inspection period, which what that does is the inspector looks at all the various points that rates your insurance. So once we have the wind mitigation, so that's your window coverings, the roof.
Year of the roof, nail spacing, roof to wall attachment, how the roof is attached to the trusses of the house.
Right.
That's one of the biggest credits.
Single strap, double strap.
Exactly.
So you get all of that, and then that makes it the easiest way to shop. We give the address and we give the wind mitigation report.
And the 4-point. Don't forget about the 4-point.
And the 4-point.
So 4-point inspection, I'm glad you brought that up. That was something, when I first started in this business, 15 years ago, not many carriers even asked for a 4-point inspection. Now there's some carriers, even on a home built in the last 5 years, they want a 4-point inspection. So I tell all my realtors, if it's not brand new construction, like it was just built this year, get the 4-point wind mitt, because that's going to answer everyone's questions. It's going to allow me as an insurance agent to quote every carrier possible. There's some people that'll buy a house and they'll only get the wind mitt done. I don't recommend that, because some carriers want both. So you're taking a carrier off the table for me to quote.
Now, for those that don't know, what are the 4-point? What is a 4-point?
So 4-point inspection is your roof, your heating, AC, your plumbing, and your electric.
Okay.
Right. So the electric, as long as there's not an old outlawed electrical box or something, electric is
cloth wiring.
Yeah, cloth wiring, some of that. If you do get a 4-point with cloth wiring and the inspector says there's cloth wiring, but it's only like in this spot, get it removed. It's not a lot of money. It's not a big ticket item. Get it removed, get that 4-point updated. You'll open the door to a lot more carriers.
We just ran across that. I think Kathleen and Jason ran across that on
older homes,
the Central Beach home,
the 50s homes. They have cloth wiring. It's yes, it's a fire hazard, but it's something that can be removed.
But the 4-point and the wind mitigation gives you the ability to kind of run the gamut on all your carriers.
Now it's opened up to everybody, because that's what they want.
Right.
If you just give me one or the other, if you don't give me any, your options are really going down as far as your carriers. So that means your premium's going up.
Okay.
So
the kind of moving on to the next favorite subject, flood. So flood policies now, obviously rates are like totally different.
Yeah.
They were they were like basically used to be subsidized,
right?
And the subsidization has come back.
So no, I mean they're subsidized through FEMA to a certain extent. I'll give you the perfect example I can give you of these flood rates are my personal home. So I bought my home on the barrier island, probably within 1,000 feet of shore. In Seagrove East in 2017. I paid $450 for that flood policy.
So that means, I just know the number, that means you were in flood zone X.
I'm in an X zone there. Yeah. Yes, it's not a flood zone. I paid $450. I'm still in an X zone. My zone didn't change, but how FEMA rates my policy is different. If I would have gone buy that house right now, my rate would be $4,500. Because what FEMA did is, in 2021, they decided, look, it's not fair that an X zone policy within 1,000 feet of shore is paying $450 the same way a guy out in Point West is paying $450. Right. That doesn't make sense.
Right.
And I understand that, right? We're more likely to get flooded here than I am out by the mall. So basically, they wanted to make it more equitable for people, and they wanted to say, look, obviously, if I got a house on the ocean, you're more likely to flood. So we're going to charge you more. So they went to rating you on cost to rebuild and your distance to shore instead of just your zone. So that's the big thing that changed. That's why a lot of people that you'll run into that they got a house under contract in an X zone, but I send them a quote for $4,000 and they're like, hey, I'm not in the flood zone. Where'd this rate come from? That's what's changed.
But what's unique, like the insurance company, the mortgage company won't require flood.
No, they still won't require.
But if you want to purchase it, which you're doing because it's smart,
right? Yes.
Now, fast forward. Now your policy is still probably like $1,000. What is your?
I will creep up. I will get a 2 to 3% increase each year, but it's going to take a long time to get to
Now, if you choose to sell your property one day, now you can transfer that.
I can't. I can transfer the grandfathered rate. They call it the grandfathered rate. I can transfer that onto the new owner.
So it's almost like a little asset.
It is. So. It is. And it's only FEMA policies that you can do that with. Okay. You can't do that with private flood. So that's the misconception there. There's some people with private floods that, we were going through closings and they were like, well, transfer the flood. And then they get the news that they can't transfer it. So, that's the only thing you got to be careful with there.
Yeah, the flood policy for mine, which we're similar in distance to the water.
Yep.
I think it's round numbers $4,000 or $5,000, and I'm in flood zone X as well.
Yeah.
So that's interesting.
The zones don't play a bigger part anymore. The zones really are for mortgage companies to gauge whether they're going to require you to have flood or not.
Which is crazy to me, unless it's changed. It's only $250,000 of coverage.
That's it, and $100,000 for your contents. So.
It's weird how it's like cost to build and all that. It's almost should be like risk tolerance, not risk tolerance, a probability of it happening.
Right. And that's the big back and forth. As agents, we knew this was kind of coming down the pike, but when the new administration came in and they actually did it, we were like, oh, this is going to be fun.
So a lot of this conversation has been about cost and things like that. No one wants insurance until they have to have it.
Right. Yeah.
So I'm sure you've got a story or two where someone has, had a claim and really needed the help.
So the big thing I'm scared of going forward is a lot of people, when the rates kind of went berserk on everybody, decided, I don't want wind. I'm going to go without the wind. I'm going to go without the hurricane coverage. And, for me as an agent, I can lead you, I can advise you the best I can and tell you, this and that. But ultimately, it's the people's choice. So we had a lot of people do that. And what we're scared of is that, maybe it doesn't happen this year, maybe it doesn't happen next year, 5 years from now. Well, we're going to get a storm sometime.
It's like me with generators. Like if I buy a generator and own it, we don't get hurricanes.
Yeah.
If you have
it and you're ready. Yeah. Yeah.
So,
yeah, there's a kind of, Murphy's Law coming down at some point with all these X-Wind policies that we've done in the last couple of years. And I'm hoping people, the expectation I have is maybe we'll have a hurricane season that's a little above average and it'll kind of drive people back to get wind insurance.
It does. But no one really, like I said, wants this stuff until you need it.
Exactly.
And then when they need it, they're like so thankful and that peace of mind and everything.
Yeah. I mean, when I go through policies with people and they're like, well, we don't need this and you don't need this and I can do limited water damage and I can do it's like, okay, everything's cool right now.
Right.
But
because we're just buying it.
Right. Exactly. That's the challenge for me is to give people the future sight of saying, hey, it's possible that your kid leaves the water on, or it's possible that your water heater bursts or AC leaks, those are 99% of the claims we get is water damage.
And you probably have some carriers that their claims, they handle them better than others.
Yes, definitely. Yeah.
Because that's the worst. Like you really are paying and
what's tough for us as agents, we have no control over claims.
Right,
so that's one thing I want to communicate with people is, once you file a claim, I'm taken out of it, really. Yeah. And people don't understand that because they're like, well, you're my agent. You're the guy that I pay every year. You're not involved in this. It's like, unless there is a problem, unless you are unhappy, I don't get involved. And when people hire public adjusters or attorneys, then I'm definitely out of it. Then I can't even be a part of it anymore. Right. So it's tough because I make promises to people and I tell them about claim service and this and that. But at the end of the day, I'm not the claims adjuster. Yeah. So it's tough.
Well, every area has, I get this, from the people from the Midwest and the Northeast about, the fear of hurricanes and it's a real fear, but it's also, if you plan, kind of keep things maintained and, then there's homes here that have been here for 50, 60 years and no big deal. And every area has their own natural disasters.
Sure.
California with fires, the Midwest with tornadoes. And the Midwest also with some flooding, I remember.
Sure.
And so it's earthquake, all that stuff. So it's
snowstorms, freezing pipes, that kind of stuff.
It's just unplanned, events.
And the thing about that is that we do give people over the past couple of years ways to get their premiums down because what these carriers started doing is offering limitations on the payouts. Right. Okay. So what they've been doing is says, okay, for $500 off your premium, we can give you limited water damage, which we're only going to pay $10,000 in water damage coverage. Mm-hmm. That's it. No matter what it is, we don't care if your whole house is flooded, $10,000. That's one of those things where I give you an opportunity to lower your premium $500 this year, and you jump on it, but then 2 years from now, God forbid something happens, and then you're like, hey, And
I hate. Talking about all, I guess anything that insurance can be negative because it's some sort of tragic event happens for you to use it. But like in the county, the water pipes have had problems.
Big issue.
And yes. So
the slab leaks are a problem. We've had carriers. So, some carriers have shut down entire zip codes. Some carriers have shut down 32962, 32968, 32967 because that's where a lot of the slab leaks were kind of concentrated.
Yeah.
So, they're a problem and there's no one can figure out what's making these copper pipes fail and what.
I really wish somebody would put some time and attention in this because, I tried, I asked around a couple different places that, plumbers and stuff like that.
Yeah.
And it's either the material or the water. And what one plumber that's been around forever said, it's the interaction. There's some sort of grade of copper that there's a chemical or fluoride or something in the water that just interacts with that particular copper.
Yep.
And creates a pinhole.
I had someone call me yesterday and they said, we're gonna repipe our house. Is there any insurance, benefit to that? And I said, there isn't a specific credit that I can give you for a whole house repipe, but I will tell you that it's a good idea.
Keep the surprises down.
Well, yeah, exactly. You know what I mean? You're going to take that off the table for you for the next 20, 30 years. You know what I mean? So that's specific question. I get that a lot. So I would, like to tell people repipes are always a good idea. But there's no insurance benefit, which is counterintuitive. And I know that it's common sense, right? So if you just paid 20 grand to repipe your house, you'd expect that your insurance would be a little lower. But as of right now, today, there's no credit that I can give you.
It just keeps the problem from sneaking up on you.
Exactly.
But it's hopefully things, straighten out on that. And I wish somebody would come out and like what the real problem is.
The county says, well, we're going by the, EPA guidelines or whatever guidelines where they could put in the water and how they can treat it and all that. And they said, well, we're abiding by the rules here. There was a lot of talk of, a class action lawsuit, and this and that. But, that's not going to go anywhere, in my opinion.
Yeah, I think it has something to do if everyone's just honest. And as soon as you bring lawyers and class action, everyone starts pulling away. But I think it has something to do with the interaction of the two.
Yeah, and on the barrier island here, we've really not seen a lot.
Which is city water.
Right. Yeah.
Yeah.
We really have not seen a lot of slab leaks on the barrier island at all. They've all been on the mainland.
Yeah. So. Wow. So this just all goes to show you that really working with, a good professional in the insurance, in the real estate business, because it's just not, there's just a lot of moving parts, and like any profession, you working with somebody that is doing enough deals where they see enough. Right. It's like going to a heart surgeon that does 3 surgeries a year versus a heart surgeon that does every day. Right.
And so just information for the viewers on slab leaks and stuff like that. The insurance company will pay to get to the leak. So if you have a slab leak, in your garage floor, it's just a concrete floor, right? Mm-hmm. No big deal. You tear that up and fix it. If the slab leak is under your dining room table, then you're pulling up hardwood or tile or whatever. So the insurance company will pay to get to the leak and fix it, but they will not pay for the leak. So repairing the pipe is on you. So that goes back to the whole home repipe, right? Just to patch that pipe, that's a good fix for right now. But that doesn't say that you couldn't have a slab leak on the other side of your house next week. So I get that question a lot. Okay, well, will the insurance company pay for a repipe? No. Now, should you get a repipe? Yes. Probably.
Yeah. Yes. And someone told me, it's like, if you get one, it's just a matter of time
till you get another one.
Because whatever is the real problem is going on.
Right. So the big ticket item when you have a slab leak, obviously if it's in your house and you have to pull up tile and drywall and floorboards and all that, that's the big ticket item, which you can't file a claim for and the insurance company will pay for minus your deductible. But at that time, while you have it ripped up, you should repipe.
Yeah. And then,
which they won't pay for. So
now if the leak happens and you have the proper coverage and it damages your drywall and your wood floors and your cabinets, if it goes that far, then your insurance covers that.
Right.
But it won't cover, like you're saying.
It won't cover fixing the leak. It won't cover repiping your house.
Right. Okay.
So that'll be on you. You know what I mean? So once you have a slab leak, a pipe leak, something like that, it would behoove you to repipe it.
And the new construction now, which I think is a great idea, is doing the piping in the ceiling.
Yes. So you're not ripping up your tile floor, or your marble floor, or your hardwood floor. Yeah.
And if you have a problem, you can kind of get to it. I mean, it will hit your drywall if you had a leak.
But it's a lot less damage than coming up through your floor or your carpet. And your
some people have had slab leaks and they had no idea.
Oh, yeah.
Because it's not, the one thing I did learn about this, it's not actually in the slab.
No.
It's below the slab. So it's like actually in the dirt.
But people understand your insurance coverage stops at that concrete slab. Anything underneath that slab, that's on you. So that's why they say
the water line.
Right.
But some people are like, hey, I got a $400 water bill. Yeah. And that's the only way they find out.
That's the only way you find out. Yeah,
So
that's
the people that get, their escrow, their insurance people are escrowed, they a lot of times don't see and evaluate their bill like they should.
Right.
And then you get a payment that's a little bit bigger because the insurance went up, and then the escrow payment.
I run into that scenario all the time.
Right.
It's escrow billed. That bill goes to the mortgage company. They pay it. Nobody sees anything. No one hears anything until they get that first mortgage payment for the new year, and they're like, hey, what happened here? Now I'm paying $500 more a month. What happened?
Right.
So when you see that, open your mail, folks. Open your mail. Don't think, okay, it's escrowed through my bank. I don't have to worry about it. Open your mail. You'll get mailed your renewal 45 days in advance, 30 days in advance.
Because they're sending you the bill.
Right.
And just the escrow company's going to pay it.
Right. So sometimes that gets paid and it's a big increase and no one knows it. No one calls me until, it's too late.
And then the payment, not to get too, but then it compounds because they've emptied your escrow account, your buffer, and now they ask you for more money to rebuild that buffer.
Right. Right.
So the big thing is shop your insurance every single year. If anything, it's going to tell you have the best rate.
Right.
And best case scenario, maybe you could save $500 or whatever, and your monthly payment on your home will go down if it's escrowed.
Right.
So
trust me, I get those emails every day. Danny, I got my renewal. Is there anything better out there? I'll be able to tell people pretty quickly. Let me shop it. Or no, you need to pay that. You need to take that and run.
Pay it quick.
Pay it quick before they change their mind. Trust me, I get that. I get that every day. It's no big deal for us.
Yeah.
I'll be able to see if an increase is exorbitant, if it's higher than it should be, if we can do better with another carrier. That just comes with experience and quoting all day and seeing where rates are for different things. Right. So,
Well, great. Well, thank you so much.
Thank you for having me.
And again, if you have any questions or anything, just put comments below and we will talk to you later. Thank you so much.
Thank you.
Bye.